$10 billion for private jet parking. You can't tell me Apollo isn't overpaying here.
I absolutely can. KKR built Atlantic Aviation into a machine. Apollo is buying a literal monopoly on tarmac space.
It's just private equity passing the parcel. They slap the word infrastructure on luxury assets to justify the multiple.
Hey, rich people aren't flying commercial anytime soon. The cash flow is bulletproof.
We'll see about the math. But first, I need you to explain how McCormick is swallowing Unilever's food business without choking. The rundown. $10 billion for parking spaces for Gulfstreams. That is what we are talking about here.
Rumored $10 billion. Let's not get ahead of the ink drying. But yes, Apollo buying Atlantic Aviation from KKR is peak private equity right now.
It's the ultimate game of hot potato. KKR bought it, polished it up, and now Apollo wants the keys. Premium infrastructure is basically the only thing mega funds want to trade with each other.
I love how we call private jet terminals premium infrastructure. Sounds so much better than luxury parking lots. Speaking of unsexy things making actual money, did you catch the Primoris deal?
Pinecrest Electric. $422 million in cold hard cash.
Exactly. Everyone is obsessed with AI chips, but Primoris just bought the guys who literally wire the data centers. Pure electrical contracting. No hype, just copper and conduit.
The classic selling shovels in a gold rush strategy, or in this case, massive extension cords. I love it. But if you want a multiple that actually makes you sweat, look at Carlyle.
The MAI Capital Management stake.
Over $2.8 billion for a registered investment advisor. Wealth management roll-ups are getting ridiculously expensive. My banker brain just flashes warning signs at that valuation.
I completely disagree. The recurring revenue on these RIA deals is bulletproof. Carlyle knows exactly what they're buying. Lock in those management fees and it just prints cash.
It's still a massive price tag for a relationship business. What happens if the top advisors walk?
They don't walk if you structure the earnouts right. Carlyle knows how to write an airtight non-compete.
I'll believe it when I see the retention numbers. Quick hit. Eli Lilly is buying Centessa Pharmaceuticals. Up to $47 a share, sending the stock up 47%.
Neat numbers. But I want to talk about the real monster on the board today. We need to look at the grocery aisle.
Oh yes, McCormick and Unilever.
A $20 billion global flavor powerhouse. I spent the morning reading the strategic carve-out details for the Indian market, and I have major thoughts.
Hold them right there. I want to talk about how Unilever is trimming the fat. We will tear apart this spice aisle mega merger right after this. The big one.
$10 billion for parking spaces.
Premium aviation infrastructure, Maya, have some respect.
It's tarmac and jet fuel. Apollo is reportedly dropping $10 billion to buy Atlantic Aviation from KKR. And I just keep staring at that number.
You hate the valuation.
I hate the game. This is peak private equity past the parcel. KKR bought Atlantic, 3 years ago? They polished it up, raised the landing fees, maybe painted the hangars, and now they're handing it off to Apollo so both sides can justify their mega fund mandates.
Okay, banker hat on for a second. You're missing the moat here. Atlantic has a monopoly in some of the most congested airports in the country. You literally cannot build another fixed base operator in Aspen or Teterboro. The zoning alone would take a decade. Apollo is buying guaranteed inflation-protected yield.
Guarantee is a strong word when your customer base is entirely dependent on the macroeconomy not cratering.
Billionaires don't stop flying private when the S&P dips 5%.
Sure, but the corporate clients do. The marginal business flight gets cut. And let's talk about the multiple, $10 billion. We don't have the exact EBITDA figures yet, but assuming standard infrastructure premiums, Apollo is paying a massive multiple just to park cash.
They have to park it somewhere. There is so much dry powder sitting in these mega cap buyout funds right now. They need scale, they need hard assets. What else are they going to buy? Software multiples are a joke right now.
How about something that actually creates new value? Not just trading the exact same premium assets back and forth across West 57th Street. I mean, the fees on this deal alone.
I guarantee you the pitch deck for this transaction was flown from KKR to Apollo on an Atlantic Aviation jet.
Oh, 100%. And they probably charged themselves a premium landing fee just to boost the trailing 12-month revenue before the sale.
It's a beautiful cycle of fee generation. But seriously, the infrastructure play is real. Look at the broader market. Everyone is hungry for physical assets with captive audiences. It's the exact same logic driving the data center deals we saw this week.
Right? Like Primaris laying down $422 million in pure cash for Pinecrest Electric. That is a highly calculated play to get into the data center plumbing.
Exactly. You buy the picks and shovels. Or in Apollo's case, you buy the runway.
We'll see if the runway holds up. The Apollo deal is still sitting in the rumor mill, so we are watching tomorrow for the official ink. And speaking of official ink, I'm frantically refreshing Edgar for the regulatory filings on this McCormick and Unilever carve-out.
Oh, the $20 billion combined revenue flavor powerhouse?
Yes. Have you looked at the details on the Indian market carve-out yet? Because I have thoughts.
Save them. Tell me everything right after this. Voices. Preeminent global flavor-focused company? I love when equity analysts break out the SAT words just to say these guys sell a lot of paprika.
Unte, well, they do. We're looking at an estimated $20 billion in combined revenue for 2025. But the part of that note that actually matters is where they mention strategically carving out the Indian market.
Exactly. Unilever is finally trimming the pantry and McCormick gets to dominate the spice aisle globally. It's a perfect fit.
Oh, come on. Perfect fit. You know as well as I do that Unilever has been trying to dump these slower growth food assets for years. McCormick is just buying scale because their organic growth hit a wall.
I strongly disagree. You don't spend this kind of money just to buy revenue. The India carve-out alone gives them a massive distribution network they could never build from scratch. It's a geographic play, not just a scale play.
I'll wait for the regulatory filings tomorrow before I buy that narrative. I want to see the exact margins on that Indian business.
Fair enough. What about the note on Primoris? Analysts are calling their $422 million buyout of Pinecrest Electric a calculated play to capture the high-growth data center market.
My favorite genre of press release. Everything is a data center play right now. You buy a hot dog stand next to a server farm, suddenly you're a critical AI infrastructure stock.
True, but Pinecrest actually does the heavy industrial electrical work. You can't run these massive AI workloads without serious power engineering. It's an all-cash deal too, which shows they're highly convicted here.
It's definitely a smarter pick and shovel play than most. Speaking of heavy infrastructure and massive checks, wait until you hear what Apollo is supposedly trying to buy from KKR for $10 billion. Spill the tea.
So the word on the street is Apollo is writing a $10 billion check to KKR.
$10 billion for Atlantic Aviation. They're literally trading private jet parking lots.
It's premium infrastructure, Maya. Don't underestimate the margins on fueling up a Gulfstream.
Oh, I know the margins are wild. I just love watching the mega funds play hot potato with the exact same assets. KKR bought it, 3 years ago? Now Apollo wants a turn.
It's a classic PE to PE handoff. Look, my former colleagues are probably high-fiving over the advisory fees right now. But honestly, it makes perfect sense. It's a bulletproof cash flow business. Rich people aren't going to stop flying private just because the macro environment gets a little choppy.
Wait, bulletproof? Come on. $10 billion is a massive premium. You really think the growth story holds up to justify that multiple right now?
I absolutely do. Think about it like a toll bridge, but for billionaires. You own the tarmac, you own the fuel, you own the hangars. It's a monopoly in the locations that actually matter. Apollo knows exactly what they're buying.
Apollo knows how to structure a deal. I'll give you that. But I want to see the debt load on this thing. $10 billion is a ridiculous amount of leverage for a company that essentially sells high-end jet fuel and nice waiting rooms.
Fair enough. But if the ink dries on this, it proves infrastructure is still the ultimate safe haven for these mega cap funds. They just have way too much dry powder and need somewhere to park it.
Literally parking it on a runway.
Exactly. We should get official confirmation by tomorrow.
Assuming the rumor mill is right. But speaking of massive numbers and weird combinations, I'm still trying to wrap my head around creating a $20 billion flavor empire.
Yes, the McCormick and Unilever mashup. Grab your spices. Tomorrow's radar. $10 billion for parking spots for private jets. That's what we're watching tomorrow if the Apollo and Atlantic Aviation rumors hold up.
Assuming KKR actually lets it go. 10 billion is a nice headline number, Nate, but I need to see the actual multiple.
Oh, come on, it's classic private equity past the parcel. Mega funds just can't resist trading premium infrastructure right now.
Maybe, but I'm actually watching the SEC drops tomorrow. We need the regulatory filings on McCormick carving out Unilever's food business.
Ah, yes, the $20 billion global flavor powerhouse.
Sure, if you believe the marketing copy. But the initial release was incredibly vague about the exact financials for the Indian market carve-out. Unilever is definitely hiding some ugly margin compression there.
You always assume the worst.
I assume the math tells a different story than the PR team. I just need the Edgar alert to prove it.
Well, while Maya refreshes the SEC database until her keyboard breaks, we need to talk about Eli Lilly paying a 47% premium today.